Hi, everyone. My name is Melo Rajakumar, and I'm a loan officer based here in San Jose, and I primarily serve the Northern California region. I'm going to give you a quick update on the mortgage industry. So basically, what you see here is the mortgage rates for the last 10 years. Obviously, it's no big surprise. We all know we are in a very low rate environment. But if you look at it right now, rates went up very marginally in the last week. And also, what the Mortgage Association says is that applications also went down by 5%. This could be a multiple reasons for that. I know some people talked about, some of my colleagues said about, buyer fatigue. And also, since the holidays are coming up, I think a lot of people are planning to travel. So based on that, they probably pushed out their buying decision. So that could be it. But definitely, we are in a very, very low rate environment. Next slide, please. So as I said, what is the forecast for the rates looking going forward? So June is probably going to be closer to 3, as we saw in the slide earlier. But the general consensus is that we're probably going to go up by half a point to about 3.5 over the next 3 months. And primarily the reasons are the improving US economy. As you know, most states have started opening up. And I think in California, especially Northern California, I think starting the 15th, I think everything's pretty much going to open up. And also inflation is going up. So those could all be reasons why rates could trend higher in the next 3 months. There is also the possibility that rates could stay flat or go down a little bit if there is a resurgence of the coronavirus. Specifically, as in some countries, there is a new strain, and also even within the US, if one of those new strains, which is not controlled by the vaccine, then potentially we could see rates going down. But and also the Fed is going to probably keep rates low, so that could be another reason why rates could still stay low. So a common question that most of my buyers ask is like, what should you do? Should I buy now or not? You can go to the next slide? Yeah.
Yes.
So I usually tell them it's basically it's like the stock market, right? Most folks, we are not able to time it. So if you believe in a stock that you think is a strong buy, then you should go ahead and buy it. So I say the same thing about mortgage. Focus on your own needs. So if you're looking to buy a home or refinance a home, and if you feel that this is the right time to do it, then I think you should do it. The other thing that I see is that maybe there is some option to do some rate shopping. Obviously, if you have a good relationship with one of your retail banks, then there is a possibility that you may get slightly better rates. But other than that, depending on your needs, one should either buy or refinance. And also, there are some new programs, especially for refinance. I know here in Northern California, most of the homes are pretty highly priced, but in other parts of the country, I think the Biden administration has come up with some additional new options to help low-income buyers to refinance. So that would be an opportunity to take advantage of. And also in purchase, there are some new programs, like for example, the Prime Jumbo program, where you need to put in only 10% down and you don't have a PMI. So obviously less cash upfront and to help you buy a home, especially a jumbo home. The next slide, please, Kenny. So I wanted to give you a quick scenario of if you did a 10% down versus a 20% down. So this is a home based here in Santa Clara County here in Morgan Hill. It's about priced about 1.3, and the buyer has a high FICO score of 760 and a monthly income of 20,000. And in this case, if you can see, if you put down just 10%, your rate is about 3.75, versus if you put 20%, the rate is about 3.25. So you have a 0.5, half a percent rate difference. But the bigger thing is that the total cost, out-of-pocket cost for your buyer versus the 10% and the 20%, you can see is almost like $130,000 difference, because everything else is pretty much going to be the same. Your closing cost is going to be almost the same, and the primary thing that you're going to save is the down payment, and you could potentially use that money either to upgrade your home or use it for something else. So I think this is a very good program for buyers to take advantage of.
My question for you is, I understand you do your own loan processing for many of the loans that you handle. Now, a lot of people don't understand, can a loan originator do their own loan processing? And people are kind of curious, what edges or advantages do you have as the LO and also as the loan processor?
So the big advantage is you have more control. So a lot of times, if you have a loan processor, they're probably dealing with multiple files, and they don't know, probably yours is just another file, right? They don't know the urgency or the priority. So if you are your own loan processor, I think the biggest advantage is you know which loans are closing, which loans need more attention. So you could work on those. Yeah, so that's, I think, the big advantage of being your loan processor and your originator.
Okay, now earlier you're talking about prime jumbo. So the rate
Mm-hmm.
difference between a 20% down and 10% down, it's about 0.5,
Right.
0.5 of a point. Okay,
Mm-hmm.
now that tells me that in this environment, are you finding more and more people opting for the 10% down versus the 20% down?
I think it's it depends. Is that probably the answer on the individual situation? If they think they can use that capital for something else, then obviously they go for the 10% down. But then there are some buyers who probably, yeah, like I said, it's a toss up. If they feel that they can put down the 20% and get a slightly better rate, then they go for that. Yeah.